The first thing we have to understand is, what do we mean when we talk about breakouts from moving averages? Well, let's take a look at this chart right here. This chart right here was actually the stock market crash that happened during COVID. And I think that this is a great example to demonstrate what a true moving average breakout actually is. A moving average breakout is, in very simple terms, when the price clearly crosses below a moving average or clearly crosses above. So these 2 points right here are clear examples of breakouts. While, for example, this point right here, you can see the price quickly dipped below the moving average, but then pushed higher. This is an example of a failed breakout. You can also see right here, I hope you can see, this was yet another example of a failed breakout. And also, for example, right here, yet another example of a failed breakout. But now then, in order to find good breakouts, we need to look out for certain signs. And the very first sign we need to look out for is increased momentum. And one simple way to measure momentum is to measure the real body of the candle. So if you, for example, take a look at this candle right here compared to this candle right here, this candle has much more momentum. And when a candle is at least twice as large, but preferably, 3 times as large or 4 times as large as the previous candles, then we usually call the candles momentum candles. So when we see the breakouts here, preferably we want to see momentum candles. And if we take a look at the first example right here, you can see this red candle. You can indeed see that the real body of this candle, so this point to this point, was pretty large compared to the previous candles. Maybe twice as large as this one, twice as large as this one, but more importantly, the candle was, maybe 4 times as large as all of these previous candles. So this right here, when we see a strong momentum candle dipping below a moving average or clearly pushing above, that is a first good sign. The next sign we're looking out for when it comes to good breakouts is that we want to see a strong candle close. And what do we mean by this? Well, let's say we have 2 candles. We have one candle that looks like this and has a long lower wick, so something like this. And we have another candle that is the similar length, but in this case, the body here is on the top. And let's imagine that this right here is the moving average. If we're looking out for a breakout here to the downside, which of these candles are most likely to lead to a breakout? Well, in this example, it's pretty obvious. And that is because in one case, we see the candle closing far below the moving average. While in the other example, even though the price went down all the way down here, we can see that the candle actually closed above. But even if we have an example, let's say that the other candle looked something more like this. And once again, we have the moving average going like this, just as we saw right here. Which of these candles is the best breakout? Well, once again, we can see that one of the candles has a stronger candle close, meaning that the candle closes further below the moving average compared to this candle. So this candle is more likely to lead to a breakout compared to this candle. And this is exactly what we mean when we talk about strong candle closes. We want the candle to close either far below or high above the moving average. The next sign we're looking out for here is increased volume. And in this example, we don't have a volume indicator currently on the chart. By the way, if you want to learn more about volume, I highly recommend that you watch our price action trading course here on the channel. I will make sure to link the video up in the video card. But what I mean with volume here, let's say we have 2 examples. We have 2 candles that is exactly the same. The candles looks exactly the same. And once again, we have the moving average coming in right here. However, in the example to the left, we only have a small volume bar, while in the example to the right here, we have lots of volume. Volume basically measures, how many stocks or how many cryptocurrencies or forex or whatever that was traded during a specific time period. And a sort of simple way to think about this is how many buyers or sellers are agreeing that this is a valid move. So if we have a strong volume bar, this will make the breakout more significant because more sellers and more buyers are agreeing that this is a valid breakout. And the last sign we're looking out for when it comes to breakouts is some type of price action confirmation. And what I mean by this, let's once again say that this blue line is our moving average. And we see a pretty nice breakout here with a strong candle close and a momentum candle. What some traders do here in order to confirm the breakout, they will wait for yet another candle to close below the moving average before they enter their trade. And this is what I mean by price action confirmation. And to make the breakouts even stronger, you can also, of course, combine the signs of a good breakout with other, tools such as chart patterns, market structure, and so on and so on. If we take a look at this market structure right here, you can see we have a low, high, low, high. Some traders, before they enter here, might, for example, wait for this low right here to be broken before they actually take the trade. Because when this low is broken, we are no longer in an uptrend. So some traders might wait for this break right here. Another strategy is to actually wait for the retest. So in this case, you can see that the price came down, right? We came up and tested this exact level that was previous support as resistance. So there are many different ways to navigate breakouts, but these rules are always good to have in mind. This video was just a short clip from our full moving average trading course. So if you want to dive deeper, I highly recommend to click or tap on the screen right here to watch the full video.